Hola mi gente, so is Wish, ticker symbol WISH, a stock to buy now? Or is this purely hype and speculation? Let's talk about it on today's video. Hola and welcome back to the channel. This is Sean from We Are Investing, a channel that is dedicated in investing and personal finance. Today, we are going to do a deep dive into a Wish stock to see if it's purely hype and speculation or if there's actually some merit to investing in Wish. We are going to go over the pros, we are going to go over stuff that I believe is somewhat neutral, and we'll talk about the cons as well. Consider this your bear case and your bull case type of video for Wish stock. So I don't want to waste your time. I just want to dive right into it. And to start off with good news, because I know a lot of people are interested in this stock, given the high volume, which we're going to talk about, let's start off with the pros. The first pro for Wish stock is the total addressable market, otherwise known as the TAM. And that's because the TAM for Wish is astronomical. It's because it's an e-commerce player in many countries, in over 100 countries. And e-commerce as a whole is a giant business that is just going to continue to grow over time. Right now, Wish has around 107 million monthly active users. It's in over 100 countries, and it has 550,000 merchants. This will continue to grow as the e-commerce sector will continue to grow. And considering that Wish right now is trading at a market cap that is just under $6 billion, and if Wish is able to take some of that market share and grow, then a $6 billion valuation is just not going to cut it, and they can definitely increase in share price and valuation. The second pro for Wish is volume, and this is more for trading because this incorporates volatility, which is where traders make money. The volume for Wish is very, very high. The average volume for this stock is over 63 million with an M shares per day. That is a very, very high volume. And from my experience on Twitter and other social media platforms, this is one of the most mentioned tickers, and it's being pumped by Atlas Trading. As you can see here, the CEO of Atlas has been pumping up Wish stock. And on top of that, you also have Zach Morris, which is pretty popular on Twitter, also pumping up this stock.
When Wish hits 69, I will give $69,000 to one lucky and loyal follower.
So given the high volume and the pumpers, there is going to be volatility in Wish, which could be a good thing or a bad thing depending on how you look at it. So what I will say, if you do invest in Wish, definitely have your price target in mind and sell when it hits that price target, because after a stock is pumped and dumped, it takes a long time to overcome that price activity. The third pro for Wish stock is the current share price and what's been happening with the stock. If you're not aware, this company IPO'd this year in December at a share price of around $20 and currently is trading at $9.16. So it's definitely well below where it opened up at as an IPO. And if you look at the price targets for the stock, the average price target is $16 a share. Albeit it is a moderate buy with only 6 analysts rating the stock, and 4 of those 6 say that it's a hold. And a lot of these price targets happened 7 months ago when the stock went public with its IPO at around $20. So they weren't going to say that the stock was worth $7, $8 when it's opening up at $20. They're going to be a little bit conservative. They're going to stick around with the initial IPO price. Now, the next thing, which is neutral because there's some good and some bad, is revenue growth for Wish. If you take a look at the annual revenue growth, you're going to say, wow, this company is really growing, because they had annual revenue of $1.7 billion in 2018. And in 2020, they had annual revenue growth of $2.5 billion. And if you look at quarterly growth, the core marketplace is up 24%. The product boost is down 24%. Marketplace is up 16%. And logistics is up 193%. Now, I've been watching videos, I've been doing some due diligence, and everybody wants to point out the fact that logistics is growing at such a high rate. However, I wanted to understand how this company was actually making money off of logistics. Were they doing this shipping themselves? What products were they offering to get revenue? And it seems like they just have a software that's going to figure out the shipping for you, but all of the shipping, all of the fulfillment is done by a third party. So a lot of that money that is coming in the top line for logistics, a lot of that revenue, you're going to have expenses with it. And the gross margins might not be very high for the logistics portion of this business. And that might explain why, even though this company is experiencing great top line growth in revenue, the cost of revenue is also increasing. And when you take a look at the gross profit year over year, it's not that different. It's pretty much flat at around $1.5 billion. So the reason why I believe that revenue growth is somewhat neutral is because you have great top line growth and logistics is also growing at a great rate, but it's not trickling down into profit because the cost of revenue is increasing with it. And the cost of revenue is separate from the operating expenses, which we're going to dive into later in this video. Another thing that I think is somewhat neutral is the balance sheet. And this is because there are some things that we have to consider when taking a look at the balance sheet. If you just take a look at the balance sheet and you look at assets versus liabilities, this company is set up pretty well. It has a lot of cash on hand at $1.6 billion. The total current assets are $1.9 billion. The total current liabilities are around $1 billion, and the total liabilities are also around $1 billion. So when we take a look at the balance sheet and we see that there's not a big difference between the current liabilities and the total liabilities, means that this company does not have a lot of long-term debt, which is definitely good. But the balance sheet is somewhat deceiving. The current assets we know are around $1 billion. The cash at $1.6 billion is phenomenal, meaning that they can pay their current assets about 1.6 times over, which is a great ratio. But we need to consider that this company just went public. They just had an IPO. So they just had a big round of cash come their way by going public. In the IPO, they were able to raise around $1.1 billion. And that is why we are seeing such a high number in cash. Now, it's a good thing, but it's not necessarily something that's going to last. If the current liabilities continues to be around $1 billion in a couple of years, this company might need to get some more cash because they are not free cash flow positive, meaning that they are not profitable. They are not bringing in money, so they cannot bring money into the balance sheet just off of the business. They're going to have to do something else, like sell shares in a private offering. All right, so let's get into some of the negatives for Wish stock. The first negative, the first con, is that the CFO, the Chief Financial Officer, resigned just after going public. And Wish did not have someone to back up the CFO. He's leaving to go to a different company, and there is no replacement as of now. Now, this information came out on June 30th. He said he was going to leave the company on July 23rd. I'm filming this on July 26th, and the interim CFO is still the interim CFO. They have not found a permanent replacement for the ex-CFO. The next con is insider trading, insider selling for Wish. Now, any IPO that goes public, there is a lockup. And with Wish, that lockup has expired, meaning that insiders can now sell shares of Wish. And I think that this is part of the reason why the share price has been suffering for Wish, because you're seeing a lot of insider selling, a lot of downward pressure from within for this company. If you take a look at the last 3 months, the numbers of shares sold from insiders is 130 million shares. That is pretty much the same as the 12 months at 138 million because of that lockup. So definitely a lot of shares have been leaving from the inside over the last 3 months. And that's because the lockup expired following the second trading day following the first quarter results for fiscal year 2021 or after June 14th, 2021, whichever came first. The next negative is profitability and expenses for this stock. If we take a look at the breakdown year over year, we can see that cost of revenue, like I said before, has been increasing. As a percentage of revenue in 2020, the cost of revenue was 37% as compared to 16% in 2018. And my theory, because Wish does not provide a lot of context on this, is it's coming from their logistics. If you look at the logistics revenue, it is up 275%, but we're also seeing a huge increase in cost of revenue. And this is because the money that they are bringing in revenue for logistics, they are having to spend in third parties to fulfill those logistics requirements. So they're not keeping a lot of that money. Another negative is expenses, and that is coming from sales and marketing. The amount of money that this company is spending on marketing over the last 3 years, because each year they spend a ton of money, but in the fiscal year of 2020, they spent $1.7 billion in sales in marketing. And that is a lot considering that revenue was $2.5 billion, but the cost of revenue at $947 million drops that number to $1.6 billion. So they are spending more in marketing than they are making off of the products that they are selling. And that is why when you combine all of the operating expenses, you can see that this company is losing $631 million from operations. And when you include some other expenses and taxes, the net loss for fiscal year 2020 was $743 million. Now, what is really bad here is the fact that the net loss went from $128 million in fiscal year 2019 to $743 million in fiscal year 2020. So this company is losing more and more money each given year. But they will be able to sustain some of these losses given the fact that they were given $1.1 billion for going public. And they probably can do some more offerings to bring some more cash to the business to help it grow, but to also pay for these expenses. And something that I did not mention when we talked about revenue growth in that neutral segment, I wanted to mention the fact that quarter over quarter revenue is decreasing. As you can see here, in 2020, quarter 4 revenue was $794 million. In 2021, quarter 1 revenue was $772 million. So with a lot of these companies that are in e-commerce or stay-at-home trades, you have to consider how much of those sales were pulled forward because of COVID. And if we get into a condition where we reopen and people start buying things more in stores, will you see a drop in revenue growth? I'm seeing this in a lot of companies. A similar company would be Wayfair. As you can see, when you take a look at Wayfair, they had great revenue because of the pandemic. They still have high revenue, but the growth year over year is decreasing, which is not a good sign because the stock market likes to see a year over year, a quarter over quarter growth in revenue, especially for companies that are not profitable and they are trading on a price to sales multiple. These stocks are considered growth stocks, so growth stocks definitely need to see growth increases in revenue. So all in all, in my personal opinion, I'm not going to be investing in Wish stock. I think there are better places to put your money. This is a very popular stock with a huge volume that technical patterns might work and you might be able to trade this stock. But with all that being said, mi gente, if you want to join us in this investing journey, you can do so by joining the Patreon, which will give you access to a Discord server of over 500 investors where we talk stocks and cryptos every single day. I alert people of my daily trades, my daily investments. There are stock alerts in the Discord. But that wraps it up. Please consider hitting that subscribe button, ringing that bell, and smashing that like button. I'll catch you on the flip side. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together we are invincible. See ya.